Hey YouTube, this is Zach with Achilles Financial, and we are back looking at our portfolio today, and in particular a key part of my investing thesis, which is bank stocks. And we had the Fed comments today that happened at 2 p.m. Eastern time, and they had a accompanying press meeting with Jerome Powell at 2:30 p.m. Eastern time, and there were some big decisions, some big conversation in those notes and in that meeting that really affects the bank stocks, and I want to highlight them because I think that A, we're going to continue to see a decline before they rotate back upwards, but B, why did they go down? I just want to highlight that one of the items that did not go down today was Microsoft and Nvidia both hit new highs. If you haven't seen my previous two videos, please check those out. And you can see, because we are currently on our third day in a row that we're looking at above 25% gains. I don't anticipate that that's going to happen again, but I have been posting those plays. You are able to copy them. So that being said, if you like 25% gains, you like seeing your portfolio go up, please drop a like down below and hit that subscribe button. So without further ado, one of my favorite stocks that I am always super bullish on is Bank of America. You can see that all of the bank stocks, they just got wrecked today, and the reason for that, I'm just going to scroll down to the bottom. You can see that we've got JPMorgan Chase, Wells Fargo, AT&T. AT&T is not a bank stock. But JPMorgan down nearly 5%, Wells Fargo nearly down 10%. So for those of you last time that I complimented, ha! But Wells Fargo, in my opinion, they are just not the best run institution out of the major four banks. But why did we see this drop today? So again, this was just part of the rotation in the first part of the day. Is we just saw, hey, the bank stocks, they were up a lot, and this was just the market correcting, reminding everyone that these stocks don't really have a great reason to be up at this point in time. But the big news of the day that is going to most likely continue to affect bank stocks going into tomorrow is the fact that the Fed says they have no anticipated move for raising the interest rates. And the reason that this is important for bank stocks in particular is because the way that they make money is off of interest income. When they give out a loan, you have to pay interest on that loan. And this is particular importance in the commercial lending area where a lot of these institutions really make their money. So right now you're seeing yields go from 2 and 3% to less than 1%, and that's going to impact the bottom line. Now these institutions are well capitalized. They do have a lot of money. They are going to be able to weather this, and I don't think that it's going to have a huge impact on them are they going to go bankrupt? Are they going to suspend dividends? I don't think so. However, what I do think is going to happen is we are going to see a pullback, and it's probably not going to see that immediate recovery. It's not going to bounce upward again. So you can see just here from a Bank of America perspective, I do anticipate that they will continue to, or at least reinstate stock buybacks going into next year, but that's not going to happen currently. So really what I'm looking for here, and this is something that we saw 3 months ago when they got up into this range right here and into April, we said, hey, we want to see them at $22 again. I don't anticipate them going down to $22 again, but I do want to build up this cash stock right here to about $2,300. I'd like to see them drop all the way, Bank of America in particular, all the way down to $23 a share. And I'd like to be looking at the options chain for all these institutions. Really looking at calls right now. I don't have an idea of puts, and the reason for that is because the puts right now are very expensive. You can see here that for a put just by the end of the week, I'm not super worried about this one, but look at what happens if we go a little bit farther out. June 19th, we're expecting to see this huge, or rather not a huge, but another 60-cent premium. That's nearly $1 move, which for a stock like Bank of America, that's a pretty big deal, and that's just going into next week. So you can see that the premiums are built in there. Now, granted, that's not nearly the same size of the premiums that we're seeing right now on the calls. So overall, the market is still bullish on the bank stocks, which is good. I do want to highlight the premiums on Wells Fargo, though. And the reason that I want to point all this out is because these are expensive for stocks that don't traditionally move a lot, and 10% in a single day, now that we're into the after hours trading, this is huge. I mean, you're looking at these calls right here. These are big swings, so I'd like to see these prices or the premiums really decrease a little bit more. And if that's the case, then I may be looking at some call options, because we're really not that far away from where we were just not too far or not too long ago, as soon as last week or even Monday, where we were at $33 a share. So not necessarily Wells Fargo, but I am going to be looking at a few of these to see, hey, where can we get a breakout? I anticipate that the news is going to continue to disseminate overnight. We're going to see that go into tomorrow morning. I'm going to be looking at a JPMorgan or a Bank of America call. So JPMorgan, they dropped today only about 4%, which is kind of the best performance out of Bank of America, Wells Fargo, and JPMorgan. What I'd like to see is a ramp up, and we haven't seen this level since pre-crisis. I'd like to see 115 again. So I think we actually hit that earlier this week around that time. Yeah, right near 115. So I'm actually looking at some calls for July 17th, because this will be right after they announce that 115. I'd like to see this around 225 for the 115. So it depends on their move tomorrow, but I'd like to get that move right there. So this is the play that I'm going to be looking at, because if it goes over that, then it gives me some pretty easy capabilities to take advantage of the lower premium here and potentially double my money on that call. But this is one that I'm looking at. The other play I'm looking at is Bank of America at $30 a share. And again, the reason I'm looking at July 17th is that'll be after their earnings announcement, and I can play the run up if we need to. This is a lot cheaper because the stock is a lot cheaper, but it's still a relatively large move. I like this 54 cents. I'm going to be eagerly watching this tomorrow. But those are the two that I'm watching. I do think that you can still make some money on some Wells Fargo calls. But the Wells Fargo, they are a big mover, and they are a little bit of a lagger if you just compare these charts to what you see with Bank of America or to JPMorgan. So those are the three big bank stocks that I follow. I know Citi's out there as well, but those are the stocks I'm looking at. Those are the plays that I'm going to be watching tomorrow morning. Let me know in the comments below if you are looking at any of the big bank plays, or if you've made any. So let me know. And if you found this content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later. Bye.